Hello, welcome to Samuel Ajala podcast once again. Thank you for watching our previous posts. We really appreciate you. Thank you for your comment, for your like, and for subscribing on our page. Thank you so much. And I would like to appeal to you that we appreciate more of your comments. We want to have a feedback on most of our posts so that we can know area to work on and how to improve on what we are doing here. So we appreciate that. Thank you very much. Now, today we'll be talking about another topic, and this topic is kind of related to every individual. What I mean, every individual, because most of us are thinking about how to make more money. We're going to digress a bit into finance. We're thinking about how can I increase my income? What can I do? We have 24 hours, but I can't work beyond the hours I am working. How do you think you can improve your income? And one thing that is certain is that whether you like it or not, you will incur expenses. There are some basic expenses you will incur, whether you're making money or not. But it's better if you can increase your income at all. That brings us to today's topic, which is how to earn passive income. Now today I have with me a friend and a colleague. His name is Ajimuda Isreal. Isreal, welcome.
Thank you, Mr. Sam.
You're really one that will be discussing with us on how to earn passive income. Over the years, he has been in that area, and I believe he has the required expertise and the professional knowledge to talk to us and to speak with us on this particular topic we're talking about today. Let me start with this first question. Now, when we talk about passive income, what do you actually mean by passive income? What do you understand by the word passive income?
Just to put it straight, passive income is, apart from doing the hard work, how can you make more income? And the best ways to do that is to either let your money work for you, or you diversify, or you put in more time to other activities. But the major part we'll be talking about, or what we'll be focused on today, is making your money work for you. You have gone through the hustle of the week, and you need to make more income. The best way to do that is you rest and you allow your money to do the magic. So that's the best way to just put it.
Thank you very much. What I can deduce from what you just said now is that when you're talking about passive income, you're talking about you earning without you being presently there. When you allow your money to work for you, you are earning passively. So if you are saving your fund, if you are saving your money into savings accounts, whatever interest they are paying you there is nothing compared to the opportunity you want to expose to. You understand? So we want to encourage you, we want to advise you on how to make your money work for you. Thank you very much. That's fine. So what are the different options of investment that someone can invest into to earn passive income?
So just to break down the word investment so that it doesn't look so big. So we want to look at it from the perspective of asset classes. So there are different types of investment, and I would just like to break it down across their various asset classes. You have your fixed income instruments. Under your fixed income instruments, you have the money market instruments. You also have your treasury bills. You have your commercial papers. You have your bond, federal government bonds. You also have your Sharia compliant instruments for those who like to do Sharia compliant investments. We also have equities. Equities are also a part of investments, another asset class. We also have real estate investment, or you want to look at real estate trust funds, which are also listed on the Nigerian Stock Exchange. You could just approach any of your brokers, your security houses, and most of them have digital platforms where you can take advantage of those kind of opportunities. But putting across mutual funds, looking at your money market fund, it gives you exposure across fixed income instruments, talking about your treasury bills, talking about your fixed deposits, talking about your commercial paper. So what the money market mutual fund does for you is that it gives you exposure to these three different investment classes. Looking at the interest rate environment, where interest rates have begun to decline, coming from 2023, 2024, where interest rates were at significant high levels, and everybody was putting their money into money market investments. Coming into 2026 with significant improvements that we have seen in the economy, you expect that interest rates will begin to decline significantly. And it then means that you want to now shift focus away from money market related instruments. So not just money market mutual funds. You also want to shift or diversify away from treasury bills, commercial papers. Although for investors that can't take so much risk, it's best that you still play around those kind of asset classes. But for investors like the young ones, you might want to take your bet on other asset classes. You might want to shift your focus to also under mutual funds. You have different types of mutual funds. For those that don't know how to identify stocks, you might want to shift your focus to equity mutual funds. So it gives you exposure to the different stocks on the Nigerian Stock Exchange. You might want to reach out to your brokers, you might want to reach out to your investment houses to be able to identify with a particular equity mutual fund. And if you are very much savvy, you have the investment philosophy, you have a good investment philosophy, you know how to pick your stocks, you know how to do valuations, and that means that you want to take your bet on some major equities or some major stocks in the Nigerian Stock Exchange market that you expect that will perform this year. So that's just a good bet or a good way of increasing your income for this year. Looking at last year, a lot of money was made from money markets, but coming into 2026, you want to shift your gaze to equities. Either you invest in equity mutual funds or you invest directly in stocks. And the good thing is technology has made it even much more easier. A lot of platforms now have digital tools where by just downloading different apps, you can now buy your stocks easily without having to do the traditional process of onboarding with a securities platform. So on the go with your phone, you can just download the different stocks platforms and you're able to buy the different stocks. So in terms of passive income, you want to put your bet on dividend paying stocks. And you also want to be careful that you invest in liquid stocks. So just to put it clearly, for the Nigerian Stock Exchange, the most liquid assets or the most liquid stocks are listed under the NGX 30 index. So instead of just investing your money in any stock under the Nigerian Stock Exchange, you want to put your focus on the liquid ones. So what I mean by liquid, that is, you can buy easily and you can exit your position easily on stocks that when you buy them, you begin to look for buyers at a point to be able to dispose your shares. So if you just look at the list of the NGX 30, those are the 30 most liquid securities on the Nigerian Stock Exchange. And again, the good thing about those particular stocks are that they are dividend-paying stocks. So it's a good way to increase your income.
Thank you very much, Mr. Israel. I believe that you have said virtually everything relating to money markets, equity finance, and other forms of investment, in which some of our viewers might not understand the technical word used. I understand, but let me just put it this way in summary. What we have discussed about is just money market and equity finance, which happens to be investing in shares. A lot of people know that. Then our father invests in shares. Then investing in treasury bill or commercial paper. So in the past, as he has explained, I won't want to dive into that. So many people have made money from the money market. But coming into this new year and new season, the interest rate is going down gradually. So the likely investment that might pick up is the stocks and the shares, which we will advise you to contact your stockbroker. Or if you need further information on some of these things that we have developed, you can send a message to us. We also put you through and advise you accordingly based on our best knowledge. Let me just ask this question before we round up. Do you think as might be a challenge, because most people are skepticism of their money when it comes to investing? So is it a safe investment? Is it a low risk investment? Can you please just briefly talk about the likely risk involved?
Moving into equities, I mean, equities are the most class of investments. I mean, I have to put that clearly. For those that don't like risk, you have no business in the stock markets. You want to remain put at free investment, likes of your treasury bills, likes of your money market instrument, commercial papers, The reason why I use quality commercial papers are because papers are not risk-free instruments. You want to look at quality commercial papers, so you want to speak to your brokers to be able to identify quality commercial papers. Credit ratings also matter when you want to identify quality commercial papers. Fixed deposits are also very safe of investment. But for stocks, the risk there is you can lose your money and can lose your capital. That is very, very clear. You can lose your money 100%. Yeah.
Okay. Thank you very much. That's the risk involved. If you are risk averse, that is someone who tries to avoid risk, go for your money market treasury bill where you have your own interest pay upfront. But if you are someone who is a risk taker, you understand, can easily diverse into equity. But let me tell you, high risk, high return, low risk, low return. That's what it means. Thank you for joining us for this podcast. I really appreciate you, and I believe that all of our audience would have benefited from this today. Thank you very much for always staying tuned. Thank you for subscribing, and thank you for commenting and liking. And remember, again, we appreciate your feedback. It is very key and important for us to grow and move forward and know how to work on. Thank you all, and God bless you. See you next time. Bye.